In question number 13 on the financial exam prep, we deal with accounts receivable and allowance for doubtful accounts. Accounts receivable in this case is $1,050,000. And again, accounts receivable is an asset on our balance sheet, and allowance for doubtful accounts is a contra asset. It keeps track of those accounts receivable that we think are bad to give us a net receivable amount that then we know what our good net accounts receivables are. So allowance for doubtful accounts is very important. In this problem it says we've got to make sure that that's 8% of our accounts receivable balance. So we take our $1,050,000, we multiply it by our 8%, and we get $84,000. So in the problem it says we use 8% of accounts receivable to make sure that's our allowance for doubtful accounts balance. Well, $84,000 is what we need. We only have $50,000 in there. So what we've got to do is increase it by the difference. Well, $84,000 minus $50,000 is $34,000. And again, allowance for doubtful accounts is a contra asset. It acts the opposite of assets. So it is increased by a credit. So allowance for doubtful accounts, $34,000 credit. What's the debit? That's the expense, or bad debt expense, which is an income statement item for $34,000. And when this entry is made, we will have increased our allowance for doubtful accounts to $84,000 to better reflect what we think we will not collect on that $1,050,000 in accounts receivable. And that's the answer for question 13.